Guys, Gerhard here, JJT, and welcome to our YouTube channel. Guys, so what are we talking about today? Today I'd like to pose the question, what have you done with your tax refund this year? Sometimes we don't know. Is it good to spend it on settling debt? Is it good to spend it on buying things I've wanted? But if you thought about this, is how can I reapply my tax refund to benefit my taxes or my tax refund a lot better next year? Look, in my opinion, as South Africans, we like our steaks. So especially in this economic, call it downturn if you would, or this recession some people seem to think it is, I like my old rump steak. And I like it thick. So, do I go and buy myself a rump steak? Do I do some mods on my car? It's important to talk to your tax consultant to help you understand where you can find more benefit from your tax refund. In saying that, there's many ways I believe people can apply their refund back into investments, call it retirement annuities, pension funds, to actually benefit themselves again in the next tax year. Why? Because maybe you haven't spent enough in terms of the maximum you can benefit in terms of the retirement annuity contributions you make. Think of this, if you've got this lump sum cash, and I believe a lot of your financial advisors, and that's why it's important to talk to them about these kind of things, will be able to help you to make lump sum contributions, make once-off contributions into retirement annuity, open a tax-free investment. Why? Because at this stage, wealth is very important. Remember, with the interest rates going up, your return on money lying in the bank or being in an investment will make more and might actually be more beneficial than to pay off some debts, if we can call it that. I actually spoke to someone this morning and he said, but he wants to take some of his tax refund and settle a bond that he's got. I said, okay, how long do you have left on the bond? He says, no, not long. It's already 18 years. Now, in most cases, you'll find that the banks will do 20 or 25-year bonds. And remember that your interest rates on bonds work like that, okay? You at the start of, and let's call it at the start of your bond, you pay more interest than you would at the end. So even at the end of a bond, with interest rates going up, you're still going to pay less at the end of the bond than you would at the beginning of a bond. Meaning that, do you believe, do you feel that would be a good thing, paying off a bond when it's almost at the end of its life? Because you pay more capital at the end of the life of that bond than you actually do interest. So think about that. What I'm saying today is, with this year, especially these economic times, let's make sure we use it to make smart decisions on our investments, on settling debt, all that kind of stuff. Maybe we should try and buy a smaller piece of rump steak instead of having that big, thick one that we want to. I'll still settle for a small piece as long as it's thick enough. So guys, any comments, please list them below. Make sure that you actually like and subscribe if you like the content, and please reach out to us if you want any help with anything, or there's anything you'd like to add. Guys, that's Gerhard from JJP.